Hey, it's Dave Knight here at 123daytrade.com. Thanks for watching. Thank you for being here. Today was Thursday, March 2nd, 2023. I just wanted to make a quick video, hopefully keep it within 5 minutes today, and talk about my trade setup, talk about the day overall, and wrap and get out. So, this is the close of the market. You see, oh, by the way, last video, maybe this will take 7 minutes, but you'll notice that the MACD is off the charts now. I'm only looking at Williams percent R without MACD. This is my favorite of the indicators overall, and I'm trying to simplify the method. Williams percent R was developed by Larry Williams. He also did accumulation and distribution and some other indicators over the years, but I like the Williams percent R. I believe my setting is at, let me just double check my setting for you. I can't remember if I changed it or not. Let's go back to indicators. As I was toying with it the other day, I think, yeah, 33. So I moved it up to 33. That has an important number in numerology. 33, think about the Masons and the guilds, and the Bible uses 33. 3, you know, I like to use 369. Anything divisible by 3 is a good thing. 33, by the way, is divisible by 3. So it's 11. Yeah, and one other thing I did add on to the charts, I took off the um, MACD and I added VWAP. VWAP I've kept. This when you first put it on, it can have up to on Ninja. It had up to 4 standard deviations. I didn't want to see that. I just wanted to see the line itself. I haven't made up my mind if I want to keep it or not, but has been recommended by another trader that I'm looking at. So I have added it to my chart. It did come into play today a little bit, but we'll talk about that as we learn more about VWAP. I haven't used it much, so in fact, I haven't even heard of it until I think traders have been talking about it for years, but I haven't ever added to my charts. But I put VWAP, and what's kind of cool, the volume weighted average price is put on the charts as opposed to down here. You can actually see it, and this is a weighted price like a moving average that's put on your charts. It doesn't fluctuate very often and much from what I'm seeing of it, but it is on the chart. So there is things that's happening. So what do we do? 1, MACD was taken off. 2, added VWAP. And 3, I changed my setting on Williams percent R to 33. And this is a tick chart. So this is my trading chart. I also added it. Let me delete this. I also added the VWAP to my 5-minute chart, which is the recommended chart that I'm looking at right now. And you can see I've put information on this chart in the trading session. So let's move on to talking about the trading session overall. Let's blow up the 5-minute chart. Now we want to define, my time's missing here on Ninja. I don't know where the hell it went to. It's on this timestamp below. You can see it way down below. Let me get my screen draw. No, you can't see the cursor now. Never mind. So the cursor, if you see the cursor move and you see the time below, there's a time down here that used to be on the charts, and I've hit something and I don't know what it is. If you know what I've removed on my charts, please feel free to comment below. I obviously moved something and I can't figure out what I removed, but the timestamps are on the cursor, and I don't know if that's a good or bad thing. Maybe it's a good thing. I don't know. I can keep track of the time on the clock in other places. So until I figure out where it went to. But it's kind of interesting. You can see the volume of crude oil though without the time. You can see when crude oil is active, right? Here is 8:05, and up here is the 2:30 mark. So it's still an 8 o'clock to 2:30 market. We're looking at um, our time frame at 9, which is 30 minutes prior to the open outcry of the stock market at 9:30. So we're using 9 to 10. See the 9, here's 9:05 volume. This is volume, by the way, you're looking at right now on the 5-minute chart. So 9:05 volume, so you have a higher volume at 9:35. And you see the closing volume over here at the 2:30 mark as traders are closing out of positions for the day or adding to. There's a blue line today, so that's a sell bar. So that would tell you that there were more sells in the close than buys in the close, suppose. Well, excuse me, more buys. This is a buy mark. Red is a sell. Excuse me. Red selling. Blue is buying. So more buying in the close is what you would assume off of that bar. All right. So you notice on the chart itself, the 5-minute chart, a couple of things I did. We added the high and the low of the supply. So demand was down here, supply is up here. Sam Seaton concept, right? Supply line up here. This might take 10 minutes because I kind of want to talk about this myself. Simplifying my trading is what this is about. So this is zone. If you want to talk about a zone, it's the major, big M, supply zone, and this is the major demand zone below. So this, you can see this is a straight line across, and this is a straight line across. And today you can see that we played inside these zones pretty much all day, right? Look at how many times we ran here. Here's 8 o'clock in the morning, right? So here's 8 down here to and you're looking at the fat of the bars, I like to say right now. So as I was looking at trading, this was the area that we're looking at. So you can see the lows are here, the highs are up here. This comes in after the 10 o'clock mark here. So this is after the 10 a.m. was over here, roughly, and this comes in after. Otherwise, that would have been my supply zone. We used the 1 hour period of times. I think it was roughly from here to here, something like that. Something like this. I think this was 9 to 10 right there. Maybe it was a little bit further, but anyway, didn't incorporate this area over here. Notice one more thing I put on before I started trading for the day myself is we had a nice Fibonacci retracement side to put in looking back. You can see it incorporates this right here, incorporates the overall move. You can notice that towards the end of the day, we traded up to R1 on this mark. I was already done my trading on this move here. I had already taken my trades on this area right here, and I went plus 60 today. This one comes in after the 2 o'clock mark, and then it comes in after I had already made my money. So there was possibly 2 opportunities, maybe even this one here was above and beyond my trading. I wasn't available to trade today. I was working at the casino 4 a.m. to 12. So my day didn't get started to around the 1 o'clock mark. And the 1 o'clock mark comes in roughly around this area, maybe a little bit shorter over here. And my trade comes in right there. And we're looking at a trade right up against the supply zone. It could have been, it's been there a whole bunch of times, so it could have blew through there and went up this way. So yeah, I had a stop in place today. we'll talk about the stops. The stop that I ran with today was 12 and 18. That was the stops I had on the market. Did not take that out. It was at 30. And I got 60 ticks on the trade today. So I was risking up to 30 to get 60. Hopefully not taking any more, adding any contracts in. I was looking not to take a loss over 500. That's kind of the rule right now. Not kind of, it is the rule. You know, as I get close to the 500 mark and the bar finishes above the 500 area on a loss. So, you know, maybe this would have been a cost that to be above 500 in the loss. I need to close the trade out if I'm still in. All right. As far as setups go today, let's look at the overall. I actually came in on a GAN, fourth time through today. Let's go back to my buys. All right, this is the time frame I was looking at the market here. See, I didn't start my trading day until 1 o'clock. I ended up accumulating a couple, looking at Williams percent R. It was looking good right here at the 1 o'clock mark. Not so good at the 107, but then it started looking good at the 113 mark. And it definitely looked good right in here at the 120 mark. Here's where you actually find the nice trade setup. But my short signal actually comes in this area using the VWAP and also using our a former line that we had. And then we have our GAN line coming through prices right now. Now we talk about the fourth time through. It's kind of an art of looking at it. But you can see one here, two here, three's over here. So this is 3. I looked at this to be 4. Whoops. So I was coming in on this right here, but this ends up being the trade that actually makes the money right there. So this ends up being the trade setup finally that happens that helps the trade win. So you're looking at the prices moving up, and Williams percent R is basically staying stable. It's kind of an iffy setup. My setup comes in right here. I literally could have closed out the trade right here, and then I would have re-entered back up here. So I ended up holding, but I almost closed out of my opening trade. I had 2 on right here. And then we had this move up here. It's kind of iffy. If it would have went a little bit higher than this, I would have closed out of the trade. So I had a stop in the market at 70. I think it was 77. Was it 78.18? I believe. So I had a stop in at 78.18. I believe that was the stop on the day, and it got close but did not run it. So I'm missing. Went to 78.12. So we got within 6 ticks of taking me out today. So the stop kept me in the trade. I ran with a 2/3 stop instead of 1/2 stop today, and that brought it in at 78.18. I had average price of 78.02 on my buys today. I mean my sells today. I had 78.02. Well, it took a lot longer. I said 5 minutes. Here I'm at almost 50. But it's kind of, it's not the best setup I've ever had, but it was a setup. We were using the demand zone. At the demand zone was at 78.18. So you had your demand zone up here. I mean, excuse me, supply. And then you have the 10. So if you have 18 and 08, so you have a supply zone right in here within 10 ticks, right? It ends up being the mark, and then so I debated about 18 being the stop. So ideally, if I was perfect today, this would have been right in here, would have been the order entry for me to come in basically on this bar right here and then taking it on. I was out of the trade before this move came this way. So I was already out. I made the money on this move right through here, and I closed out this mark right here is 77.77, and that was a target that I was really looking for, the 4 sevens. I thought we could run back to 7777, the bottom of the demand zone today. So you had 7818 up here, and 7777 is it was a pretty tight zone today, to be honest, and it could have easily went against me today. My goal was to keep my losses to $500. The setup itself, the setup that was the best on the trading session ends up being on this high, and that would have been your setup right there if you really wanted to be technical about it. So your initial entry point up here and an add right in here, and then you have your movement. And then this bar right here it was a decision bar for me. We had already been there. We went down a little bit lower. Look at this on the GAN side. You can see the GAN was kind of confirming that the prices were trying to come back up again. And this was my exit signal right here. And that was all contracts off, and I ended up with plus 60 ticks. So overall, that was my day. This is how it all set up. Notice that the account balance is showing 50,580, and I have a high of 50,860. If I would have been perfect today, it looks like almost $300 of profit. And this is maybe one of the biggest drawdowns of Apex that I want to talk about just a little bit today. You got to be careful about your pullbacks. And a lot of my issues inside of my trading have come back on the pullbacks, because you have the 2.5K in the 50K account. You have that drawdown, the trailing max drawdown that draws up in your account as your account balance goes up. And so as your account high goes up, the max trail down comes behind that. And you got to be cautious about this. You got to keep while you're trying to, once you get to 50,100, it doesn't move anymore. It starts at 47.5, I believe. So your reset, or your day one, you start at 47,500, and it can move up to 2,500 behind that, right? So you put 2,500 on here, and that's 50K. But according to rules, they can move it to 50,100. So once you get to 50,100, the max drawdown stops. So this is more of a play after you get funded than anything. But you've got to be careful when you're talking about your account high against the max drawdown that comes up behind it, right? So you got to keep that rather tight. So in other words, it forces you not to be able to have a trailing trade and more, because you got to always keep your mind in the back of my mind. I've got to worry about this max trailing drawdown as the trade goes on. So you ends up, if you're trading multiple contracts, you got the first sign of weakness into a trade, you got to lighten the load a little bit. Is how I've been attacking the market, because if you allow too much of the market to come back, this makes the max trailing drawdown worse, and it makes it closer. And if once it gets closer, like I get to the mentality, my mentality is one of the trading rules that we're going to talk about late on another video. Maybe me just Um, um, you know, and you can fill in the blank there. FUC, you know who. Tell her I said hello. Uh, that's the mentality that you get to. The FUC letter I'm trying not to say right now. F it, right? F it. And you get to an F it mentality that you're willing to just reset. And honestly, I took on too big a size on the two trades I blew. I got to 52,995 on the first one I was in. And I got to 52,909 on the second one. And I got um, angry, got into revenge mode, added up the 10 contracts and screw it, excuse me, F it. I'm balls to the wall. I'm going to either blow this account or I'm getting above 53,000. 2 times so far, the F it kicked in, and I have lost the my EA account, the evaluation account, because of that mentality of going above. My goal is never to go above 5 contracts in my trading in any given day. And once I get above 5, it becomes very dicey if you're going to make it. Because if you think about 5 contracts on the big contract right now, every move that moves against you is 50 ticks. I mean, yeah, $50, 5 ticks. When you're at 10, every move is 100. So all of a sudden, if it's moving against you 100, and you've got 2,000 drawdown behind that, you only have 20 ticks of availability and the move against you before you hit that max threshold. You're over leveraged, in other words. This is an over leveraged position as well, but you need to run with a very tight stop if you run with 5. So if you're at 5, that puts that $500 at what? Just 10 ticks, right? So it's 10 ticks from a certain point of when you add that in. So maybe you add 1 here, and 3 up here. Your average cost is maybe here, and your 10 ticks is up here somewhere maybe. So you have to run with that 500. That's right, right? $500 loss. This right here is a $2,000 loss by 20 ticks, right? So if your 10 ticks right here is $1,000. So it doesn't take a rocket scientist to figure out if you're maxed out in your contract size and you got that max trailing drawdown and you don't have 2.5K, you have a 2,000 mark trailing behind it or something like that. It's been going with me. You'll find out that it's very easy to blow out an EA and have to reset. So yes, I did reset the account. I know what my my winning percentage is roughly on trades. I run about 80% overall on my wins. I know that out of every 10 trades I make, I'm going to lose about 2 of them. And what I found out is one of those 2 is the F-it trade. So I've got to get away from that. That's my over leveraged position that causes lots of grief and you know, the positive side, the other side of that double-edged sword with trading 10 contracts, if the market moves 20 ticks your favor, you can get 2,000 into the account. I mean, that's the double-edged sword, but it doesn't normally work out in your favor because you're not. At least I don't trade 10 contracts right off the bat. You know, I'm usually coming in at 2, adding 3, 4, 5. That's how I did it today. So I was in at 2 up here, added 1 here, and added 1 here, and I added the final one right in here. So this is how I got up to 5 today. And I took it and I was all out at this area. So I took off some on this mark right here when it moved up here. I took off another one up here, and I took off the remaining contracts. Actually, I took it off right in here as we moved close to the 7777 today, I was looking to try to take my goal on the 5 contracts as I was looking at it overall. I knew I was going to take off 3 automatically on this move right here. I did not take off here. I kept the 2 on at this point because I already took profit on 3. I ended up taking the other 2 off right here. No, excuse me. I think I took off 1 here and then the last one off right there. But my overall goal today to start the trade was to, I was hoping for this move to come through and break through here. When it did not, and it stopped right here, I looked at this, and then that's when I closed out of the trade itself. You got to pay attention what your technicals are telling you, right? Later on in the day, you see that if you'd have stayed in this trade and tried to run it out, you got your ass kicked, right? It does go up to 77.18. It would have stopped me out if I'd have stayed in the trade. This is actually a even better setup at the 2 o'clock mark. It's actually a really overall better setup overall. You have your 77.18 mark, right? You have your demand supply line cutting through prices roughly right there. You have your pricing. You have a very nice setup right here. Here's your signal itself and a move down back to the VWAP sign. So you actually have a nice signal right in here coming at the 230 mark. I believe that was the 230 right in this area as it closed out. So that was a nice setup as well that you could have caught later in the day. I was done in my trading before the 2 o'clock mark. I think this was 210 up here. Let's see what that time right now was. I actually was done on my trading day at 210 as the high. And then you had your signal coming in here at 416 to sell it. You could have added here and then re-added again. And then you see it closes out. But the VWAP sign ends up being the signal down, letting you know that the market was getting close to that. And that's one of the reasons that I did put it on, because the trader that I was listening to talk about it says it can end up being a profit-taking area. You notice it got close to it today. So according to that trader, you see the setup, see the down move, and you see it didn't get close. It didn't get to the VWAP, but it did show a decent signal to take on. You see your Williams %R showing and confirming the trade itself. Your prices are confirming, and you see the downward movement. This was actually a better overall setup in the afternoon if you're looking at the 1 to 230 area today. I showed you my trade, and I showed you a better trade setup in the day. If I was smarter, you had your supply zone, right? 70.18 right in here. If I was a smarter trader and more patient, this was a better setup in the afternoon. And then you had this move here that I did not take advantage of and I didn't even see. I knew that I was already out of my trade on this bar right here. So I ignored all this to the right today. But I did want to point out that there was a nice setup after the 2 o'clock mark. If you were looking at you were looking at 30 minutes of trading and you were just looking at the 2 p.m. mark, you had a setup come in after the 2 between 2 and 2:30 and would have made you money. All right, this is Dave Knight here at 123daytrade.com. There's a lot longer video than I anticipated, but there's a lot of things I wanted to cover today. We talked about our trading at 5 minutes. I like to drill down every day. So I started on the dailies. You can see all my buys and sells in here. Let's blow that up. Maybe you can see how this might be a better chart. Let's see if I can zoom this in a little bit. can see that doesn't look right though. Oh, these must be entry points altogether because it's just showing you entries. Here's my selling up here. This is my buying here. This doesn't look right though. Oh, you know, the simulator's in here too. I was playing around the simulator too, so that's not really showing you correctly how I traded the day. But how do I zoom back out? Zoom out. All right. Oh, this is the daily chart. I'm going, why is that looking so bad? Oh, that's daily bars. Duh. Let's go down to 60 minutes. And you can see the drilling down mark. And I go drilling down from 60, I look to the 15 minutes. And then we break down to the 5-minute. And this is where I put the supply zones on and demand zones. I put them on at the 5-minute level. You see this chart's a little bit more clear. Let's see if we can zoom in on this. This might be a better way of seeing how I took on the trades today. All right, there you go. You can see my sales in the market right there where I was selling. Here's my buybacks right in here. And I was all out on this one, looks like right there. So I bought a little bit here and bought the last of them back right in here, confirming what I was telling you when I was trying to make sure, and that has a lot to do with what we talked about before, watching your account high versus your max trailing drawdown. Watching that, trying to keep mindful of where your account high is right now. If you look at my account high versus my account balance, there's a $300 difference right now, basically between the two right now. So in net effect is I do not have a 2.5K drawdown right now. Net effect, I have a 2.2K drawdown in the Apex. This is the one thing in the Apex that you've got to keep track of. This has been my biggest nemesis, to be honest, inside this, and this has caused most of my resets and most of my failures, is the max trailing drawdown behind it. Getting close to a target and then having to worry that I take too much of a loss, and then I hit the old F it period, because I know that I losing $1,000 on that trading day because of my stupidity. Then I go, you know what? Let's go down to the drawdown, and it's not a correct way of thinking, but in the heat of the moment, your mind and your psychology does all kinds of crazy things right now. Mine does a lot of crazy stuff. So, you know, hard stops are really tough for me to keep on. I'm doing my best to stay within a $500 loss. I wrote down some of my trading rules. I actually want to cover this in the video, but maybe we'll just, since I already spent 33 minutes with me, might as well just read some of the things I wrote today and I woke up this morning before I went to work. It says, what is my trading plan? This is a rough draft right now. Rule number 1, do not risk my account on one trade. You must hit close all always when you get to the F it feeling. I actually wrote the real word out there. Rule number 2, live to fight another trading day. Rule number 3, make your biggest weakness your greatest strengths. And I drew a little diagram out on your worst, your best, and your average. You're trying to move your worst and your best to the right, so that your worst is a little bit less and your best is, and you end up, and the point of that is your winning percentage gets better. And then by doing this, by moving your average over from your worst to your best, meaning you're moving a bell curve over to the right a little bit, Maybe it's better just to describe that. I guess we'll have this as kind of a training session right now. So one of the things I learned from a video that I watched, this is your worst side, this is your best side, and here's your average. So maybe your average right now is 50% winning rate. If you can control some of the worst part of yourself, like for instance, some of my worst things that I have, over leverage, over trading, revenge trading, self-sabotage, and the effort mentality. If I can move this over a little bit, here's your worst, here's your best, here's your average right there. Maybe this moves it to 70% by doing that. My goal right now, obviously, since I'm about 70 to 80, to move my average over here so that I'm at 90% winning rate to 80% winning rate. I'm between 70 and 80 right now. I want to move over to the 80 to 90 area and keep away from the F it. The F it. Keep away from over leverage, over trading, revenge trading, self-sabotage, and the F it. If I can control that weakness, I move my average over a little bit better. Hopefully that makes some sense to you. All right, rule number 4. Let's see what happens if I limit my trading loss to 500 on the 50K account and stop trading for the day. Rule 5. Cut losses short. That's always been one of my rules. Protect capital at all costs. Rule 6. Let one contract run. Take one off when necessary to protect max trailing drawdown. Rule 7. Max trailing drawdown is the greatest weakness of Apex trader funding. This must become my greatest strength by making steady wins to lessen the blow of the inevitable loss that will happen. So this is your biggest problem that you're going to have at Apex right now in this funded account, is going to be how you control your max trailing drawdown against the account high. Rule number 8, limit trading to good setups. Have a real reason to be in a trade and don't trade on a whim. The first trade, if wrong, must exit and not add to a loser. $500 loss rule. Rule 10, occasionally you'll have a runner. When this happens on 1 or 2 contracts, use the highway to exit the trade. The highway, right? My highway. A real good setup on the highway actually happened a couple days ago. Let me zoom out on that right there off the screen. But for instance, let's say that you took this trade on this day, and you're looking at a close above, right? Let's see here, when did the entry point? All right, so let's ignore this right here. Let's say this didn't happen and it stayed within the highway. So my highway is this little thing going down here. You see this close above here. So that close above here, when it moves above it, that would take your runner off the trade, right? This one's a little bit too close, to be honest, to your entry point to worry about it. You'd still probably be sitting up here at break even on your trade setup. But down here, it has moved enough, and it has went to an area that you're paying attention to, and then you see a close above the highway. So you see a profit-taking area, in other words, right? Now this one ends up not being taken out, though, because it's kind of interesting. If you're looking at trailing one, if I would have taken this afternoon trade, like I said, this afternoon trade was a lot better of a trade setup. It still didn't take you out, even over here. And in fact, you're still in this trade if you would have kept it on. Now, of course, you would have got out at the 5 o'clock mark. But if you're looking at if you could have stayed in this trade on the highway, the rule of the highway is it's got to close above the green bar, in this case, the sell bar. So you're looking to buy back the market. So this buying move up, you need another bar that closes above this one. So the way it works for me in the highway is you would need another bar. So this is your decision bar. It closes above, right? So one of these bars above that would need to close above that area of this one here, and then you close out of the trade. If you've noticed here, none of this on this downward movement had you close out. You literally could have stayed in this trade all the way down here at the 4:30, close to the 5 o'clock mark today, and just trailed it behind in the afternoon session and came out right at the 5 o'clock mark today and closed out the trade. So if you would have max, let's say you traded 2 contracts today at this trade, your first one would have been taken out roughly in here, most likely, because you had this move here, and you would have taken, let's just say that if I would have been perfect today, 1, 2, 3, entry point over here. I think the entry point was before this. Now we'll just play around with it a little bit. All right, so that's kind of the highway. This would have been this trade setup. If the trade setup happened back here, you can see that this is the closeout area right here. So this trade would have been over right in here at the 2:30 mark. But if this didn't happen here, so you have your 1, 2, 3 setup, right? Looks like it could have closed out here too, by the way. But if bottom line, let's say that it didn't happen, and you're able to stay in the trade, the highway. Later on, when you have that profit taking area, what I like, I talked about this before on my website years ago, the rabbit and the hare, excuse me, or the tortoise and the hare. The tortoise and the hare, when you're taking trades off, you got one that's the rabbit side of your trade, and then you have your other one that's the tortoise side of your trade that you're trying to maximize profits. This trading strategy works better when you don't have that max trailing drawdown to worry with. This has been my biggest nemesis at Apex right now, is the max trailing drawdown, because I am not really able to use my tortoise side of the trade to capture the bigger wins. So I'm trying to adjust my strategy for this so that I can take the bigger side of the wins and then have less trades if I can catch a ride. If you can catch a ride, that goes back to my 3 trading rules that I firmly believe in. So if you ask me what my 3 trading rules are right now, and they're always the same: cut losses short. Part 2, let profits run. Part 3, take profits on the ride. So that's never changed. That's always my 3 trading rules that I run with. When you can let it run, let them run, take profits on the ride, you're incorporating everything that you need in your trading plan right there. So I believe I covered all 10 rules that I've got right now. We've covered a lot of ground today. A 5-minute video turned into almost 45 minutes today. I know if you want to just cut out the one portion of the trade itself, if you're watching the end of this video and you just flip all the way to the end of the video, my trade setup itself was through here, a 4th time through with a GAN signal, and my exit ended up being right here on the 7777. So I was looking at 7777, hoping that we'd push through. It didn't want to go through, and then I got out. So I ended up I was looking at a $500 loss and ended up taking 60 tick win. So $600 win today. So I did do better than the loss side. And it was getting close to closing me out up here on my entry point. So I could have traded this better. But it ended up being a win for me today. All right, Dave and I here at 123daytrade.com. Thanks for watching. Thanks for being here. I am definitely out now. Bye for now.